Yo, what's going on? It's your boy Track Investing back here with another video, and we're going to be talking about today what I call the PD array bounce effect. Now, it's a novel term that I coined. It obviously stems off ICT concepts, but it's just a condition I like to talk about that typically happens when a certain environment is put in place. Now we're going to be going over that, but as always, this is the daily review playlist. Okay, so we go over an NQ daily review where we talk about the trading opportunities for the day. I'll go ahead as I'm going through the video. We'll define what this PD array bounce effect looks like, and I'll show you that through a top-down analysis. I'll also talk about the ICT-22 model as well, which is the flagship entry model that we talk about on this channel that typically I'll trade on the 1 minute. So we're gonna start on the daily, get all the way down to the 1 minute, and then on 1 minute I'll go over those trading entries that you could utilize. And as I'm doing that top-down analysis, we'll talk about what the PD array bounce effect, conditions can typically look like. Now, on top of all this, just want to make sure that you like what you're hearing so far. Press that like button. That's what the like button is for, right? It's basically like you paying me $5, but it's actually not having to pay $5, right? It's actually free. So you can just press that like button. Appreciate you, Gangi. Next thing you know, you can do also press that subscribe button and press that notification bell. Those are two fantastic buttons that are worth pressing. You're goated for doing that. Lastly, let's also press that Discord link down below in the description. Join my Discord. Ask me any questions there, anything about my videos. Or if you don't want to do that, you can also just leave a comment below. All right. So without further ado, let's get right into the video. So we'll start off with the daily. Let's look at the daily profile. So what's happened, right? As I've mentioned in previous videos, we've been in a market maker sell model, right? Where from starting in the January of this year, we started to show bearish price action to correct some of this bullish move that we had in the tail end of last year. How do I know that? We had a break of market structure below this low after purging this high, right? Had a break of market structure, return back to this fair value gap, then price made a new low, return back to this fair value gap, then price made a new low, right? That is a series of lower lows and lower highs. That is bearish market structure, right? This is a long-term high. We're yet to make an, and this is an intermediate term high here as well, because they reacted from these fair value gap SIBIs. And so that would make these highs hard to penetrate unless there's going to be a reverse in the direction of order flow. But because of the seasonal quarterly shift that we've been in, price has been bearish. And so when you return back to a relevant premium array, I'd like to see price continue to fall. Now, with that being said, today we had a pretty interesting profile where this daily candle, right? We took out all these lows below here, and now we purged and reverted higher and came back to this this daily SIBI. I just want to remove this from the daily so that it's not distracting. But yeah, you can see that we came just above the constant encroachment of this daily SIBI and then reacted lower. So right above this constant encroachment of this daily SIBI, based on the bearish price action that we want to see, this would be a good area on a shorter time frame to short from. Now we have this equilibrium level, which is essentially from this high down to this low. That's equilibrium. But price refused to get there because we have this daily SIBI in the way, which can typically happen, right? You want to see price return back to equilibrium to come back into a premium, so price could run lower. But if price is really bearish, sometimes we won't go back to equilibrium. We'll just react off the most recent PD array, and then we'll run lower. You can also see that we just came shy. I want to see if that actually touched that bearish order block right there. The low on this candle is 21,144. The high of this candle is 21,143.75, right? So we were one tick away from tapping this bearish order block here, and we just ran lower. So that tells you that price is quite bearish, right? Those are some algorithmic signatures that says we can't even get to some of these premium arrays, right? We have this daily SIBI that's above here as well. We have this equilibrium level. This is the weekly constant encroachment, right? So the weekly constant encroachment of this wick, right? Price didn't even get there. So we're just, and we just came right above this this daily SIBI. Now, if I want to be bearish, I want to see price run away now, right? I don't want to see us come back up into this area. I want to see us run away, right? That'll tell me that we can really see some nice shorts going into the next couple of days. Now, this is the daily candle that we're focused on here. Let me just let me make sure we don't get any of the new day's price action. And so that's been it on the daily, right? And price did run up higher and then ran lower, but you can see it retraced on the day higher. And why is that? I mean, we've purged the key low, purged a couple key lows, right? And we have this large wick in the way as well. These are going to be some conditions where, unless price is ultra bearish, it's going to be a little bit high resistance and difficult for price to expand, right? And here's where we start to get into, what I call the PD area bounce effect. Now, this on the 4-hour. Let's go over this. On the 4-hour, we have this 4-hour BISI. And this is why we do a top-down analysis, because you need to know what's happening. A lot of traders who like to scalp intraday, they just trade and trade and trade without looking at a higher time frame. I personally like to look at a higher time frame because it can inform the conditions you're in and what the draw and liquidity really is, right? So we're reacting from this daily SIPI, right? So the higher time frame will always trump the lower time frame. So ultimately, I'm still bearish based on the way that we're reacting from this daily FVG. But we have this 4-hour BISI in the way. And so you can see price, even though we expanded lower and it looked like we're going to close below it, price is still failing to expand heavily away from it. And there's a reason why that's happening. If you look at this on the weekly candle, very similar thing happened here, right? We kept wicking below it, but we struggled to get through it, right? Until this weekly expansion, right? 1, 2, 3, and then on the 4th candle, expanded away. Now on the 4-hour, you can see that, we have 1, 2, 3 candles. And I'm not saying the 4th candle here is going to expand away. It could be the 5th one. It could be, or we could even reverse. If my bias is wrong. But my anticipation is that, especially with these relatively equal lows right here, right, and there's a daily BISI below here as well, and some order pairing here, some lows here that price could easily target. And we have a bearish higher time frame environment. Price should ideally go through this 4-hour IFVG. But here's the issue, right? Tomorrow is CPI. Right? Today's Tuesday. So tomorrow's CPI. A lot of times when you have higher time frame PD arrays that are typically sensitive, right? So some daily FVGs or a 4-hour BISI FVG, right? Especially the daily and the 4-hour, sometimes the 1-hour as well. The days that are before a very high impact news driver like CPI, typically price can bounce between PD arrays that are on a higher time frame. Go back and backtest this. You will see this happening a lot on weeks where you have CPI, right? On a Wednesday, or you have FOMC on a Wednesday or even a Thursday, right? You'll see the days before we're just bouncing between daily and 4-hour FVGs, right? Or even on a week where you have NFP, right? Monday through Thursday, right? If there's no solid news drivers before then, price could just be bouncing to these two very critical, PD arrays. What does that really mean on the lower time frame? It means that on a lower time frame, price is going up and down, up and down, up and down. Now, if you are a day trader, right, or if you are an intraday trader, or you're an intraday trader rather, where you are holding positions over multiple days, this can be very frustrating, right? Or even over multiple hours, it can be very frustrating because price could run somewhere, then return back, run somewhere, return back. But if you're a scalper, right, these are really prime conditions to capture nice price swings at the very extremes of the range, at a discount and at a premium. And I will show you those trade entries today. If you like what you're hearing so far, don't forget to press that like button. Make sure you subscribe and press the notification bell so you don't miss a single daily review where we go over these concepts every single day on this channel utilizing ICT concepts. Now, let's just go over what happened today as well in the 4-hour. So overnight, starting here, right? We didn't have too much movement until really around that pre-market session, right? Right at the tail end of London and the pre-market session, we had an expansion, right? And so that means that the AM session, right? If you have an expansion, typically pre-market, especially starting from London, right? Where we moved how many points now? Almost 200 points. That could create conditions, for a choppy AM session, especially when you have a 4-hour BISI like this in the way. So what does that mean? Don't hold your price moves for very long, right? Price can whipsaw back and forth, right? If you're going to be scalping in those areas. Now, price expanded lower, came back and closed in the upper half of this 4-hour FVG. Price tried to do that again in the PM session, but then came back and closed in the upper half. So we are obviously struggling to get through this PD array. And what I would like to see is, I could anticipate that price would probably stay inside this 4-hour FVG until CPI tomorrow. But you never know if there's some super weakness overnight, maybe something that's happening in London session. It could run lower, but that would be if you put a gun to my head, that would be what I would want to see. Now, you must be wondering what this line is. This is the new week opening gap, right? And so you can see on the 1-hour here, we hovered on the upper half of this new week opening gap overnight, formed a high, right above the constant encroachment of that daily FVG SIBI. Price started to sell off, right, from about 3 a.m. going into 7 a.m. Now breaking market structure below this low, and so this is when I created a bias that overall we should be bearish, right? Price continuing bearish movement. Because think about this, the classic market maker sell model. You come back into a higher time frame PDRA, like a daily FVG SIBI, and then once you're in the daily time frame, you go down to the 1 hour, right? And you wait for the 1 hour to break market structure once we reach that premium array. So you can see that we took out this high and then took out this low, which means it's a break of market structure lower, right? This is also what you call the ICT-22 model. Now, the 22 model is what we trade on this channel. So 22 model is like this. You have a low, high, that purchases this high, has liquidity, runs lower, breaking market structure, creates a fair value gap, price returns back to that, and then runs lower. That's the 22 model. That's the flagship trading model on this channel. We'll go over plenty of examples. Try to see if that went over your head. So you can see high, low, higher high, break of market structure below this low, fair value gap. Price returns to that and closes in the lower half, even though we're wicking higher, touching this wick. We're touching this candle's wick, right? Rejection block wick multiple times. Price is still closing at the bottom half of this 1 hour SIBI, which tells me that we're bearish, right? And I'd like to see bearish price action going forward. But because, it's the day before CPI and, we have these PDRAs in the way, price is likely to whipsaw. So you need to be very careful about your conditions, right? For holding trades very long. It can come back to your break even. So you need to have pretty healthy stop losses as well. Price ends up running lower, going into 9 a.m. to the 9:30 opening, all the way down to making a low really around that 11 to 12 p.m. Lunch hour time, filling in this 1 hour inefficiency, and in particular, right, completing that 1 hour inefficiency right here as well completely, and purging a key low, which is what we call order pairing, right? So that's a pretty sensitive level and a good draw on liquidity below this low to fill in this gap, right? Price returns back to this FVG SIBI, but overlaps it and comes back to the new week opening gap, finds resistance against it, then runs lower and takes out this low, right? You can see we also return back to this 1 hour SIBI as well, but we're stopping in the bottom part of this 1 hour OB negative, right? So this order block, this bearish order block. And even though we overlap this SIBI, right? Even though we overlap these SIBIs, you would think, oh, maybe that's an inversion, but we can't be thinking that way because we know that higher time frame we're bearish, and so really I'm looking at this bullish order block as the last line of defense. And sometimes on days like this, we need to allow, right, for price action to color outside of the lines that it's doing here, and price ends up running lower and creates another low here at 3 p.m. and then that purges this low and runs higher and comes back into this 4 hour busy, not showing a willingness to, expand away from it and close outside of it definitively. And so what does this tell you, right? This is an example of price running up and down, up and down, up and down, right? Because of the PDRA bounce effect conditions that we are in right now. Now I'm going to introduce a couple more PDRAs into the chart. Remember this big box right here is the 4 hour FVG that price has been inside of all day that we went over in other time frames. This is a 15-minute fair value gap that I just wanted to keep here that we ended up inverting in the AM session to run lower back to this 1 hour, right? And here is the opening range gap, right? So relative to yesterday's close, right? This is the yesterday's close to the 9:30 open, right? Which is on RTH. You can see this level right here. That is an opening range gap. And you can see within the first 30 minutes of the trading session, we completely filled that in. ICT talks about that it is 70% likely that within the first 30 minutes of the trading session, you're likely to fill this. And so you can see that coming into 9:30, there's a couple things I want to see. Overnight in London, we made this high, ran lower. This is the 1 hour market structure break on that's displaying itself on the 15-minute. You come back to that 1 hour SIBI right here on the 15-minute. With that 8:30 a.m. news that we had, price rallies higher one more time to touch that 1 hour wick, and then creates a bearish order block right post 9:30. and then fills in this opening range gap within the first 15 minutes. Price returns back to this bearish order block and creates a repellent block here, running lower, closing outside this opening range gap. And then not inverting this 15-minute busy yet, we return back to this small SIBI right here. Then price runs lower, makes a low of the session here at 12. And then here at 12:30, we take out this 12 p.m. low, so the previous time cycle low, previous 30-minute time cycle low. We purge that, run higher. But for me, at this point, I want to see this 15-minute SIBI get inverted first before I can chase any more longs. Plus, I'm bearish anyway on higher time frame, so I'm only really going to be hunting shorts. Price returns back to this opening range gap, the bottom half of it, right? Returns back to the bottom half of this opening range gap, plus today's new day opening gap. You can see here, plus this black line is the new week opening gap as well. A lot of PDRAs price to get through. We react, drop lower, take out this low, but then purge higher, come back into that 4-hour busy, right? So again, you can see price running up and down, back to key PDRAs. On the 5-minute, okay, 9:30, we have that opening. Price runs higher, taps that 1-hour wick, plus the consequent correction of the daily SIBI right here, runs lower. And what do you see here? What is this? Pause the video. What is this? You're right. It's a 22 model, right? High gets purged out by this high. Low. We break this low here. That's a break of market structure. Fair value gap. Right here. Price returns back to that. That's your entry. Now, on days like this where you're anticipating it to be very choppy, maybe you could enter at a discount. So yes, maybe just wait for price to run back up here. Your stop loss is above this breaker's high, right? Or it can be above this high. And then you're aiming for what? That 1-hour busy below. It's pretty obvious for price to get to. So let's go over that. Maybe enter here at this level right here. Stop loss to be here. You get out here. Nice 1 and 2.5. Okay. Now there's better entries that we'll go over as well on the 1-minute. But if you're a 5-minute trader, that could be a nice trade. You can see here at about 10:10, 10:15, we wick higher into this bullish order block, right? Which is also an intermediate term high, which I'm not anticipating for price to break. Because we have this long-term high here, and we're obviously interacting with this wick. Then we make another intermediate term high here, right? And we have SMT that formed with ES of here as well, right? You can see that ES took out this high, NQ did not. If that didn't happen, I probably would have waited for price to take out these LRRs right here. But because we had that SMT, I felt confident about shorting. Price ended up running lower, returns back to this 5-minute SIBI, runs lower, returns back to this 5-minute SIBI, runs lower again. So about 12 o'clock, we make this 12 p.m., we make this lunch hour reversal, right? Low, high, lower, low, reacting from this 1-hour busy at a discount. Breaking market structure above this high. Turns back to this fair value gap. Runs higher. Excellent 22-mile entry there as well in the 5-minute. So what do you see? Right? Probably would have aimed for a 1 to 3, taking out most of my trade when all these PDRAs over here are overlapping. And if you want to make, be a little bit more defined about your risk, wait for 3 PDRAs. So the body of this particular candle has closed above the bodies of this. So this is technically a breaker. 1 minute, 5-minute IFVG here, and an FVG. So this is the BPR plus the bullish order block candle. Can get better R here, right? Aim for 1 to 3 like this. What time does that entry occur? 12:55. What is that? That's a macro, right? Macro is the last 10 minutes to the first 10 minutes of every hour. If you see a 22 model that has a pretty good setup around that time, it is highly likely to be in your favor. Price makes this high around 2:15, so we're now entering into the afternoon session. We purge this high, right? Run lower, create a fair value gap. Right here is a 22 model, short. But as you can see, once price closes definitively below this low and creates a fair value gap here, this is a 22 model where you do not want to wait for price to return back to the fair value gap, right? We had a pretty steep leg run up. So if we're going to reverse, I want to see a steep leg run down. We're not returning back to a raise. So you would enter via market, build this high, and you can aim for the low of the day. Since we're bearish, you can see that is a nice 1 to 4.42. So some good 5-minute trades. Price makes a low here at 305. Bullish order block, turns back to it, runs higher back for the day. And why are we moving up and down like this? Because of the PDA conditions I just talked about, PDA bounce effect conditions. Let's end this off here. 1 minute. Just want to go over some key trades today as well. You can see that at 9:30, starting to swing lower, touch the constant encroaching this opening range gap, run higher, come back to this 1 hour wick. 9:42, high, low, higher high. Break of market structure here, fair value gap, that's an entry. Run lower, takes out this low. Be aiming for this low ideally. I would take out some partials here, take out some partials once you fill in the opening range gap. And then you get stop break even. Then you come back up here, right? High, low, higher high, break of market structure, fair value gap, price runs lower. That's an entry right here on this candle. Trades below here, returns higher a little bit, but doesn't come back to break even, ends up finally taking out this low at about 10:50. Macro continues that move downwards, consolidates for a little bit, and then at 11:28, after this consolidation and purging these highs, we would trace back into this particular, SIBI right here on the 1 minute. Continue to run lower, taking out this LRRs and coming back into this 1 hour. So that's another trade entry right there. And that's 1 to 2 that you got in there. Price runs lower. So it's consolidating. And then, there's a nice short here that I ended up taking. We ran lower. But once we moved up higher here, I broke even. And once you have this nice clean break of market structure right here, you can enter long because we know that we're now in a steep discount and we have that Peter Ray bounce effect. Price can run higher. Comes back to this particular FVG on the 1 hour. Low, high, lower, low. Break of market structure. Turns back to this fair value gap. Right? One more purge of liquidity right here. I probably would have moved my stop here, so I might have got stopped out early. But once we had that, another break of market structure, and plus another fair value gap that's very tiny right here, that's another entry. Price runs higher. Comes back to that area. And then here's the 5-minute 22 model. This would have been better on the 5-minute. A lot of chop here. But why could I have trusted that this price is going to fall? Look at market structure. This high purges these highs right here. And I know that I'm bearish or that we're in conditions where price can bounce back and forth. So once in this steep premium after a very large move like this, I can anticipate that we're going to have a retrace downwards. And so this high purges this high. What does that make that? A long-term high, right? Price creates this short-term high right here. Breaks market structure below this low. Price creates another high here. Breaks market structure below this low. Below this low. And at this point, we've now broken this low as well, right? Which is the real 22 model, right? Low that we need to break. Fair value gap. 250, right? We're about to enter the 250 macro, time of day. Price runs. Goodbye, sayonara, right? Then the last 20 minutes of the day here, after taking out this low, price runs higher again, low, high, lower low, turns back into this redelivered rebalance price range, leaves this gap open, breakaway gap, and runs higher. Multiple trading opportunities, right? So that's why I say on days like this, scalping is going to be your best friend, right? Not holding for the daily range. Hopefully this has been helpful. Press that like button if you learned something. Leave a comment below any questions. Join that free Discord below. And press the notification bell so you don't miss a single daily video. Love you guys. Peace. See you in the next video.